So we have Jaclyn Gallagher with us. She's been an accountant for more than 10 years at Buckno Lisicky, and they are general tax advisors. Like they don't just do tax preparation; they do strategic planning, and Jaclyn has expertise in helping businesses start up too. So that's why we're having this conversation with her today, and I'm looking forward to diving in.
Sounds good. I'm ready when you are.
Learn how to start a business in your community with Launch Local podcast, full of know-how and inspiration from successful small business owners, including your host, Amber Artemis. Hey, hi Jaclyn, how you doing
Good.
today?
How are you?
Good. I'm so glad you had the time to sit down,
Mhm.
even though tax season has just begun. Like the gun has been fired, the pistol start. Like
Yep. We're in it. It'll be a long 13 weeks.
yeah, wow. Is that wait, 13 weeks is till the end of March, and then
Technically, tax
we
season starts January 16th.
Oh,
So
okay.
right now is your end of year reporting cycle. So that's your 1099s and W-2s and things. But tax
Mhm.
returns aren't accepted until the middle of January.
Wow, I'm already learning something new from you. That's great. And actually, that makes me feel a little better because honestly, like January 2nd or 3rd rolls around and I'm like, "Oh, I should be getting stuff together." And yes, I should, but,
But you do
you
have
know,
time.
yes, that's good. Okay. So today we have Jaclyn Gallagher from Buckno Lisicky, and they are a tax accounting firm based in the Lehigh Valley with branches where? I mean, I work with you in Lehighton, but where else are you guys
We
located?
have an office in Center City, Allentown, in Bethlehem, in Cedar Knolls, New Jersey, and the office that I work in here in Lehighton.
Awesome. Well, we're really lucky to have you. You guys are super professional. Like it was a no-brainer for us to work with you.
Thank you.
And yeah, we've been actually full disclosure, my husband and I have been clients of Buckno Lisicky for I don't know, what do you think? Like 3, 4
I
years,
think
5
I
years?
think 4 years now.
So, Jaclyn, you look very young, but you have actually been an accountant for more than 10 years now. Is that correct?
Yeah, 2024 was 10 years, so I'm
What?
going into my 11th.
And what drew you to become an accountant?
Um, Honestly, I had started off in a science major and decided that I liked rules more than math and switched into accounting.
Okay, all right. What's your favorite board game? Like you have to like if you like rules, are you like a gamer?
Not particularly board game
Okay.
style. I'm like a Risk and Yahtzee girl. I'm not into the
Oh,
big fancy.
I like Yahtzee. It's all about numbers
Yeah.
and uh, probabilities
Mhm.
and whatnot. Cool. Well, all right. Okay. So put yourself in the shoes of a new business owner. What would you tell them are the important things to do starting out?
Okay. First most important thing you can do is decide what type of entity you want to be, because that sets you up for your filing requirements, for your licensing, and for the things that you need to keep track of. Depending on what entity you choose, you'll have to file certain tax returns at certain times. You'll be able to deduct certain expenses or not be able to deduct certain expenses. So, evaluating how you see your business going and then making an informed choice of entity is probably the best place to start.
So, what do you mean that you might have to do filings at different times based on what entity you choose?
Okay, well, if you're a sole proprietor, which is the easiest business to form, you're just as yourself as an individual providing a good or service, that gets filed with your personal income tax return that's due in April. However, if you're an entity like a S corporation, those are due in March. So there's an earlier filing date that you would need to know. Corporations can also elect into a fiscal year depending on the timing of their busy season. A lot of manufacturing will do that. They'll opt into a 6/30 or a 9/30 year end instead of 12/31.
Okay, because they're busy
Yes.
making their product
Instead of
when
having
but
the time to put together all their records for taxes. Yeah.
okay. All right, interesting. Like the most popular formation I would think is an LLC. Like if somebody's going to go in and start a business and choose an entity, that's the one that people usually reach for. Why is that?
Yeah, it really is. The LLC, first of all, provides a benefit that is not related to taxes at all, and that is liability protection. So it basically creates a separate entity from you that protects your personal assets. It limits your liability for, judgments that may come if your business is litigated against. So that right there is a big draw for people. It's a state level entity. They get to sort of separate themselves from their business. They establish the corporate veil without having to actually form a corporation and issue stock. From a tax standpoint, it is basically the most flexible entity option that you can choose. If you're a single member LLC, the IRS can treat you as a disregarded entity and you just file with your 1040. If you're a multi member LLC, you default to a partnership, but you have the option of electing to become an S Corp at any time.
And the S corp election is something that we went through with you guys. And tell me, I mean, I don't, I could paraphrase, like what advantages. I mean, well, let me try. All right, I'm going to try. I'm by electing to be an S corp, we were able to reserve some, like to sort of divide the income that we received. Like some of it goes through payroll,
Mm-hmm.
and then some of it is the owner's profits.
Yes.
Otherwise, like prior to that election, it was all owner's profits.
So yeah, before you make an S corp election, if you are a single member LLC, that is taxed like a sole proprietorship. So all of your income, your profit, is subject to self-employment tax, which you're paying both the employee and the employer side of your FICA. By electing into S corp status, you are required to have the owners on payroll. The owners need to receive reasonable compensation, and that gets reported on a W 2 that is subject to FICA. The rest of your profit is then treated as passive income. So it is only subject to ordinary income tax. It is not then subject to FICA. So big tax savings there, potentially 15%.
Yeah, that's really interesting. Yeah, I'm. Are you familiar with Rich Dad Poor Dad, the author? He's always talking about building passive income and
Mm-hmm.
assets and whatnot, and how the poor, the average working people are taxed at a higher rate
Mm-hmm.
than wealthy people, and it would be because of this, because they're able to receive a substantial amount of their income through passive income, it sounds like.
Yes, and no. A lot of the things that the high net worth individuals are able to do that ordinary lower earning taxpayers
Earners, yeah.
aren't, um, is that their income comes from investments and capital gains, which are taxed at a privileged rate. Long-term capital gains can be taxed as low as zero, and max out at 20%. So there's an advantage to having your money make money for you.
It's interesting. Yeah. Okay. Well, so you were getting back to starting a business, and we don't, putting that hat on, we want to choose an entity, an incorporation of some sort. My husband and I actually operated our own business for going on, I don't know, at least more than 15 years as a sole proprietorship. And we carried insurance and limited our liability that way. And we had contracts to try to limit our liability too, that said we're only liable up to the amount of this contract.
Mhm.
And that was how we chose to operate, and we were okay with that. You're not an attorney, but I don't know if you can speak to liability so much, like comparing that setup to the LLC. But you need the LLC before you can elect the S corp,
Yes,
right?
correct. You can also organize directly as an S corp, but that is more of a time and resource outlay. It takes more time from the attorneys to draft the agreements. You do have to issue stock and record ownership, but you can form directly as an S corp. For a lot of people who are just starting out their business, they want to see how it's going to go, if it's viable, if it's something that's worth, dumping a lot of resources into as they go. And so the LLC provides you with that flexibility where you can operate as a single member LLC, a sole prop for the first several years. And then as you start making money, as you start thinking about hiring employees and things like that, it may be advantageous to elect into S Corp status.
Gotcha. Yeah, that makes sense. And even just, I don't know, like making the decision to form an entity is a commitment.
Yes.
I think starting out as a sole proprietor is a low risk endeavor. It doesn't cost you anything to do in theory,
Yep.
as long as you don't lose your
Yeah,
shirt.
there's no filing fees, there's no organizational documents that you have to have prepared. If you operate under a fictitious name, you do have to register that in the state of Pennsylvania, but that would be the
Yeah,
only requirement that a sole prop would have.
yeah, that's the DBA, right?
Yes,
Like
yeah.
doing
If
business
you're doing a
as.
DBA or you're trading as, or even if you're just using something fun, a fun variation of your own name, you do need to register it in Pennsylvania.
Okay, interesting. Yeah. All right. Well, and then you also need to file for an EIN. That's separate than, like, if you're a sole proprietor, you just file under your own social security number, or you can elect to have an
Yeah.
EIN, correct? Even as a sole proprietor.
Absolutely. Sole proprietors can be employers, and that's really what an EIN is. It's the employer identification number. So once you are taking on these tasks of what an actual business would be, rather than just sort of you're doing all this work yourself, you should file for an EIN number. It's very easy. You do it online now, and you get your number assigned almost immediately. And that is the number that then you use to represent your business. That's the one that gets filed with your tax return. That's the one that goes on your employer payroll tax reports. Any business that you do with the IRS would be under that number.
It seems like a good idea for privacy's sake if you're going to be
If
issuing.
you're issuing 1099s, you
Mhm.
have to put the payer's identification number on there. So if you are a sole prop operating under your social security number, you're giving your social security number out to your vendors, your contractors, your landlord, what have you. So yes, it is, you definitely get a benefit from the privacy that an EIN provides.
Good to know. Yeah, so I'm thinking about, next steps, right? And in the state of Pennsylvania and in most states in the country, like we collect sales
Mhm.
tax. And so how do you go about setting up a sales tax account so that you can stay compliant?
So you file a PA 100 with the Pennsylvania Department of Revenue, and that is the form that allows you to open all of your tax accounts. So if you were going to be an employer, you'd need an employer withholding account. If you're selling taxable goods or providing taxable services, you need a sales tax account. That form is also used for things like lottery retailers and public utilities who need accounts. But that is the form. Again, now it's submittable online. It's very simple. You're basically just providing the contact information for your business. You provide your EIN number, your date of first operations, and then select what licenses you need to apply for.
Okay, great. Yeah. And then, like, when would you do that? Like, how soon after, setting up operations? Like, is it something you need to do right away, like before you begin operating?
Yes, you need to have your sales tax license in place the first day that you begin selling taxable goods and services. So, you know, do it as part of your formation documents. Get your operating agreement, get your EIN number, file your fictitious name registration, apply for your sales tax license. You will get a certificate issued to you, and the Department of Revenue will assign you a filing frequency for which you need to file your sales tax returns.
Okay. And like, is that something you guys do for your clients, or do your clients usually do that themselves?
It's a mix. I do sales tax returns for some of my clients. Some of them file them on their own. It's really just how comfortable you are with the input of that data, and how much time you have, if it's worth your time to do it, or you'd rather pay me.
Yeah, I mean, we actually handle our own sales
Hmm.
tax. That's something that Josh, my husband, is comfortable
Hmm.
doing through the online portal that the state has.
Yeah.
And there's different periods, like our businesses as they've gone up in or down in revenue.
Hmm.
We've had to pay monthly or quarterly depending on the amount of revenue we're bringing in. Is that correct?
It's not based on the amount of revenue, it's based on the amount of sales tax due in the third quarter. So if the amount of sales tax that you file in the third quarter is over $600, then you are switched to a monthly filer. If it's
Oh,
below $75, I believe, they can switch you back to a semi annual filer where you only file twice a year. For high volume sales reporters, you can be required to need to make estimate deposits every 2 weeks.
wow. We haven't gotten there yet.
No. But a lot of larger small businesses, fast food franchises, things like that, hit that estimated deposit threshold.
Okay. And I guess my question before pertained to like setting up the account.
Mhm.
Like, do you set up sales tax accounts for your clients
Yes,
or
absolutely. Again, if that's something that they're not comfortable doing, we will absolutely prepare the PA 100 for you, provided that you give us the information you that we need that you have. But yes, we will file the PA 100. We'll apply for your licenses, and then going forward, if you would like us to prepare your sales tax returns, we will do that as well.
and we actually formed our S corp through you guys.
Yes, I don't remember if you were already an LLC.
Yeah, we went to an attorney for the
Yeah,
LLC.
and so
But
prepared the
do you do
election.
that too?
No, we do not form
Okay.
LLCs. The LLC is best formed by an attorney, not an accountant. I mean, technically we can. It's not illegal. It's not required under the law that it be prepared by an attorney. However, it is best practice for them to keep you compliant as far as the operating portion of your LLC. That gets filed with the Department of State and they issue a certificate of organization, which recognizes your LLC as an entity. And from there, once you are an existing LLC, it's really easy to elect into S Corp status. It's a quick form 2553. You just have to have all the members of the LLC sign off on it and submit it. It's pretty much an automatic approval.
Okay. Yeah, and I would say as an added bonus to getting an attorney to form the LLC, you then have a relationship started with a legal advisor. And we've had to call on the attorney that formed my husband's LLC. I think at least twice,
Mhm.
and both times I believe he didn't bill us, for the advice, and the whole exchange felt very good. Like it was nice to have him in our corner, and
Exactly. It's nice to have
yeah.
somebody that you already have a relationship with that you can just call on when stuff happens. You don't want
Hmm.
to have a situation and then be scrambling to try and find someone to represent you. So an attorney is always good in that regard. You Once you establish a relationship with the attorney, they can then review your customer contracts, your vendor contracts, make sure that those things are valid and enforceable, give you options and advice on how to purchase property or how to handle collections, things like that, that a lot of
Hmm.
people don't have the experience in to think about themselves.
Right. Yeah. So, and I just reminded somebody, I have a course going for people that are forming businesses right now. And she said, I'm doing everything myself. And that's one of her challenges. And I reminded her that, like, well, by forming this team of professionals, like including like advisors, professional advisors
Mhm.
like yourself, you're not alone. Like when you run into trouble, it's good to know that you can phone a friend.
Mhm. Absolutely. And, as a CPA, we do so much more than just prepare your taxes. Don't get me wrong, we will absolutely prepare your taxes, but we can help with bookkeeping. We can help with business analytics, help you make lease versus buy decisions or buy versus finance decisions. We can help you estimate what it would cost to hire an employee. We can project what is anticipated if you open a new branch or a new location. So these are all services that we can provide to you if we have an existing understanding of your business.
Yeah, and we've called upon you a couple times, several times for those types of services, so I can testify that it's awesome. Being able to consult with you guys.
Mhm.
So thank you for all that.
Absolutely, anytime. One thing I do also want to add is if you are buying an existing business, it's also a good idea to have a CPA and an attorney involved, just to make sure that the sale is being handled correctly. There's bulk sale requirements in Pennsylvania that need to be satisfied and reported upon. The allocation of valuation of your purchase price is important and can have long term effects as far as depreciation. So you want to have your CPA make sure you're writing in the allocation in your sales agreement in the most advantageous way.
Yeah, I mean, I think that's really good to hear too. That for people that are anxious to get into business, sometimes a great way to do that is by acquiring somebody
Mhm.
else's or a piece of somebody
Yeah.
else's business.
Even if you're just purchasing the assets from a business, and you formed your
Hmm.
own corporate shell, those assets still need to be reported. There still needs to be a sales agreement. Things need to be retitled, and it's great to have an advisor in your corner going through all those things.
Yeah, absolutely.
And now a word from our sponsors.
Delicious elderberry wine, fresh and healthy elderberry syrup, crisp ciders, all available 7 days a week at Wild Elder Wine and Cider Company, 76 Broadway in Jim Thorpe, specializing in regional folk wines and ciders just like your grandparents used to make. Elderberry, blueberry, raspberry, blackberry, apple. Now serving lunch too. That's Wild Elder Wine and Cider Company, 76 Broadway in Jim Thorpe. Open every day 11 till 5. Also available online at wildelder.com.
So, a lot of times people start a
Mhm.
business and what they've really done is created themselves a job. Okay. And they're very good at it.
Mhm.
They're maybe they're artisans, they're the best at what they do. Right.
Absolutely.
And right. And this is a totally legit way of operating and having a business.
Mhm.
A lot of times those individuals operate that way because they would never trust anybody else to to do what they do,
Mhm.
and there's a block in a lot of people's minds about the hassles of having employees, and it's a hill to climb sometimes for
Mhm.
people to get over this threshold of becoming an employer.
Mhm.
Now, from your perspective, like, what's your advice, for people that are taking the plunge into becoming an employer?
I think if you evaluate the way your business is going, your current results, and you find that you're turning down work because you don't have the staff to accept those jobs that you would normally take, if people are going to your competitors because you're scheduling out very far, then yeah, you should hire. Also, if you're producing a good, you may be great at producing this good, but maybe you're not a good salesperson. Maybe you're not a good back office person, and that's absolutely okay, but recognize that that's not your strength and bring somebody in who does have that as their strength.
Great. Yeah. So what are the legal requirements to becoming an employer?
So you have to have an EIN number first off the bat. That establishes your need to file a Form 941 and a Form 940. 941s is your quarterly IRS filing, and that reports federal withholding and FICA. Form 940 is what we call FUTA. It's the federal unemployment tax, and that maxes out at $42 per employee, and that gets filed annually. You will also have to open employer withholding accounts with the state of Pennsylvania and an employee account with Pennsylvania UC. They'll assign you a Keystone ID. Both of those Pennsylvania withholdings get filed quarterly as well. And then, depending on where you are, you will have a local taxing jurisdiction. So, Berkheimer, Keystone, Allegheny, one of those that you will have to set up an account with and withhold local earned income tax and LST from your employee's pay. The employee withholdings are considered a trust tax, So you need to make sure you are filing your payroll taxes on time. Violating a trust tax as opposed to an income tax or something that you would be responsible to pay is a way bigger deal, and you don't want to get on the wrong side of
And so, like from our perspective as employers, like it's all been pretty effortless because we work with a payroll company. You guys also provide payroll.
that. We
Um,
don't provide live payroll, we provide quarterly payroll.
okay.
So if you
Okay.
have a few employees, we can help you calculate what the net check will be. You can write that check every payroll period, but we don't do direct deposit or anything like that.
Got ya. Okay. So you just have real basic payroll services for
Yes.
people that like to write their own
and
checks and
and
whatnot.
people who don't want to move to a payroll company or an S corp where the owner is the only employee.
Hmm. Yeah, that makes sense. Be silly to pay for payroll for yourself.
Yeah, yeah.
Okay. From our perspective, all of those very complicated sounding things have been somewhat effortless because we rely on our payroll company, which we work through Square. Your point of sale company likely will also offer payroll
Mhm.
services, and it's kind of a tidy ecosystem, of managing those funds. Yeah, every once in a while there's a snafu. We haven't had any unemployment claims, so we haven't had the joy of experiencing what that's actually like. I've heard from other employers, that it can be a challenge, that the sort of rightfully so, the bias is on the side of the person filing usually. And I respect that, where that's what the fund exists for, as a safety net to help people until they can find their next job. But, I will say I had a friend of mine say that they had video of somebody like flipping them the bird, like double bird, like, and like yelling and throwing a scene and walking out
Mhm.
and then filing for unemployment.
Yeah.
And I believe that story ended and they got the unemployment.
Wow, I'm surprised by that. Um,
I'll have to fact check
yeah,
that. Let me circle back.
I don't have a ton of experience with the awarding or the judgment of unemployment claims, but you will
Uh-huh.
get paperwork in the mail that asks you to affirm whether or not you fired that employee, you fired them for cause, or if they quit voluntarily. In a case like that, where
It was pretty
yeah,
voluntary.
that's a voluntary quit, and usually things like that are denied. So unless there was some mitigating circumstance there, or she was able to go back and claim against an even prior employer, which you can do in some circumstances, I'm not 100% on how that one snuck through.
Yeah. Yeah. But it so far, all those things have been worth it for
Mhm.
us. And something that has helped us is to just keep an eye on the percentage of our revenue that the cost of having employees takes up. And like
Yeah,
my rule of thumb is like about 30%. Like we try to keep it around or under 30%.
yeah, and I
Um,
think that's absolutely fair as a judgment, because you do want to be allowing profits to flow back to equity owners.
Yeah, and to cover overhead and the
Absolutely.
cost of goods sold and all that stuff. So that's been our rule of thumb. And in Square reports, like that number is reported in the daily sales report, and so that helps me continue to feel good about having employees that we can afford them,
Yeah, yeah, and that's an important thing to evaluate. You may be in a position at a certain point in time where having an employee makes sense, but then things change, time goes on, and maybe business isn't the way it used to be. You have a slow season, you need to lay people off.
Yeah. And I honestly, like, we've never even, I don't even know what that involves. Like, and I don't know that that's your area of expertise.
As far as calculating whether employment is like being an employer is still beneficial or laying people
Well,
off.
let me paint a scenario, that percentage is going up to like 50%
Mhm.
or even more, then it's time to lay somebody
Mhm.
off. What does that look like? I mean, is that something that your accountant gets involved in? Like
Typically
how does
not.
an employer make that decision,
Um,
and what does it look like?
we can help evaluate how much cash is being spent on payroll. So, what out of your operating is going to payroll and payroll taxes and payroll processing and employee management and benefits and all that, so that you can get a feel for where that number truly falls in the aggregate and how much of your resources are being put out to employees. If it's something where you won't be able to continue to cover overhead because payroll costs keep increasing, we can definitely advise you, hey, maybe you want to cut payroll, maybe you don't need 4 people in the office, um, things like that. As far as laying them off, that's not necessarily something that we do. Usually, the employer just has to say that they no longer have the work for the employee and release them from service.
I mean, but a layoff is like you intend to hire them back, right? Like when
I mean,
the season picks up, possibly.
you can hire them back, but you don't have to. You can just
So you just notify them that they're laid off
yeah,
and they can go file for
yeah,
unemployment.
pretty
If
much.
okay.
You've terminated them. It wasn't a voluntary quit, so they can file for unemployment. And whether or not you extend an offer to come back the next busy season, or when things pick up, when work returns, that's totally up to the employer. There's no requirement to do so.
And if you operate like that, though, your unemployment withholding is going to go up.
But
You're going to need to have a lot more in there.
yes, the UC employer rate will go up. The employee withholding side stays the same, but the employer rate, the amount of actual deductible payroll tax the employer pays, will increase with each claim.
Yeah. And does it go back down over time if you stop laying people
Yeah.
off, or or stop having people file? Like,
Yes,
is there
no,
hope?
you can, and you can appeal your rate. Um, with,
Mhm.
with Department of Unemployment, Department of Labor, you can appeal your rate if it's unreasonable. Sometimes there will be industry rates, for industries that they see a higher percentage of claims against, construction, seasonal things, where they will initially assess you at a higher rate. But if, in the course of a year, you don't really have any claims, you, you can call them and appeal and try to get your rate lowered.
Okay. Well, and honestly, like we've been very fortunate, knock on wood, to not have anybody file. Yeah, we try to be good employers. You know, stuff happens, not to make judgments on any other employers that happen to have people filing.
Mhm.
But, you guys have been part of the reason, you've influenced our practices as employers, by suggesting that we start offering various
Mhm.
benefits. And we evaluated offering medical insurance and it was just not going to work. And frankly, the employees would do better on their own going through the
Mhm.
marketplace and receiving, the tax subsidy to do that. But we started with a simple IRA this
Mhm.
year, and that was something that you guys had suggested, and I didn't know that I didn't think our employees were going to go for it, but they
Yeah.
did. They loved it.
The
And
opportunity to save for their future selves. And by offering that and recognizing that they're going to need something in the future, that helps improve employee morale and your relationship with your employees.
yeah, and it makes sense for the employer
Hmm.
because we get the deduction for the contribution for the expense, and it helps them. It's one more thing that we can offer to help
Hmm.
them and to hopefully retain them and keep them happy and help them meet their goals.
Yeah, absolutely.
So, and I saw a new incentive come out, a state incentive for 529s.
Yeah, that's new starting in 2025, where an employer can opt to match an employee's contribution into a 529 account. It doesn't have to be an existing 529, like they can open one while they're employed with you and make a contribution. It is something you have to offer evenly to all employees. There's no discrimination, no tier levels there. So if an employee has a 529, you have to offer them the match. They don't need to take it necessarily. Best practice would be if you have somebody opt out to get it documented.
In writing.
Yeah. But yeah, it's nice. You can get a up to a $500 Pennsylvania credit for each employee that you're contributing this match to, or up to the dollar amount of the match if you're contributing less than that. So you get the deduction for the employee benefit and you get the tax credit from Pennsylvania.
You sent me a breakdown via email when we were discussing this before, and so if we were going to say like we'll match you up to
Mhm,
$500, you said we get to deduct the $500 as an
mhm.
expense, but the credit was not dollar for dollar, right? The credit was
The credit,
less than 500
the cre-
in that example.
um, I don't believe so. The credit is just capped at $500. So if you contribute
Oh,
more than that, you're still only getting a $500 credit. So that may be the point I
oh,
was making.
yeah.
Where if you
I think that might have
you
been
know
your
you can
example.
match above $500. If an employee puts in 1,000 and you want to match 100% of that and put in 1,000, that's great. You're going to get the deduction for that 1,000 as an employee benefit, but your credit is only going to be limited to $500.
Okay, so you get to double dip. You have a deduction.
Just on the state, they're just offering this
Okay.
as an incentive where you get this Pennsylvania tax credit. So the example that I had put to you is that if you contribute $1,000 into a 529, that the employee has to provide the employer with documentation like, hey, I made this contribution here, it should be eligible for your match. And then at whatever level the employer decided to match, which is completely at employer's discretion, they can match 100%, they can match 50, they can match 10% of the contribution.
But up to, let's say we're gonna match up to $500.
Well, so it's limited to 25% of your contribution. So 25% of that $500 that you agreed to match is 125 bucks.
Oh, okay, that's the credit,
Yes, is
but
the
you get to
credit
t you
portion.
and you get to take the deduction
Yes.
for the $500.
But the maximum credit is also $500. So if you were contributing like significantly and your 25% was at $500, you would get that amount as a credit.
Got yeah, so it would have to be like 4 times that
Yeah,
probably or something. Yeah, okay.
but it
Alright,
is
great.
available and that's per employee. So
Mhm. Mhm. Yeah, and the way I described it was like it's like the Wild Elder Scholarship.
honestly, and I think it's also a great thing to sort of strengthen the relationship with your employees too. You're concerned about their future and their family's future, and that helps breed loyalty.
And actually, I looked into it and it seemed that employees could do this for themselves because we have a young employee
Mhm,
who put off going to school. He's not sure if he wants to go, and he's working
mhm.
in the meantime. And he was one who was really excited about the simple IRA actually. He's like 19 years old and already
Sure.
saving for retirement and he's like over the moon about it. But if he opens a 529, he can name himself as the
Yes,
beneficiary.
absolutely. It's just about putting aside funds for qualified education. And that's what the state is trying to encourage by doing this. It doesn't matter who the beneficiary is. It could be a niece or nephew, it could be your own child, it could be yourself.
Yeah, no matter what your age.
Yep.
Like you could be 50
If,
and
as
open
long as
yourself a
you're
529.
Absolutely, as long as you're going to be using that money for qualified education expenses, that 529 is for you.
Well, and then on that note, if he decides not to go to college, you can roll those over into an IRA,
Yes,
correct?
you can roll them over to an IRA, but it does follow the IRA contribution rules. So you're limited to $7,000 a year. You have to have earned income in order to support the retirement contribution. So it's not necessarily as simple as just, taking $25,000 out of your 529 and plunking it down in an IRA. There does need to be some like scheduled contributions in line with the IRA limits for the year.
Gotcha. Okay. Cool. So let's talk about cash flow. This is something that I can guiltily admit to. We were commingling expenses in our personal accounts, and it was kind of a game changer for us to segregate. I mean, certainly, like once my husband opened a business that was hiring employees and whatnot. We had a business account, but it was so tempting to keep operating that sole proprietorship like out of our own account, and we did end up setting up a second checking account to receive all of our payments from clients and to pay expenses from there. And we got a credit card that was segregated to do all our purchases for that business. And it was really just So much easier.
It really does make it easier as a way to track income and expenses when you're not having to go through and look up checks that you wrote 9 months ago and see whether that was a business expense or not. When you can just look at your deposits and roughly have an idea of how much money you took in for the month. So, even as a sole proprietorship, that sort of distinction between business assets and personal assets is important. Um, but for any entity that provides you any kind of limited liability protection, that is imperative. You can sort of ruin the corporate shell that you've paid money to have established if you are not segregating personal and business expenses and assets. Forming a corporation or an LLC creates something called the corporate veil, which creates a hard line between you and the business. That's the thing that protects your home and your vehicles and your kids' college funds from creditors associated with your business. If you're commingling your accounts, you have already breached that veil. So it's very easy for litigation to then find you liable.
So money can flow back and forth. Like for instance, like you as the business owner can make a contribution,
Mm-hmm.
like you call them capital
Capital contribution, yeah.
contributions and that gets recorded on your
Mm-hmm.
books as that, right?
Yes.
And then, you as the owner can get paid. It's a little unclear how that works with cash, if whatever cash, like if you've got a business where you've got a cash till and, your point of sale system is recording the cash that came in. Let's say, it was $100 and you took $50 out as the owner to go buy groceries. At the end of the year, your cash, like how does that work out? Like, is
Ideally,
there any
you should be keeping track of cash purchases that are paid out of your drawer. So when you go take that $50 out, keep a notebook next to the till, jot down the date and that you took it, and mark whether that was because you need to go buy something for the business in cash or if that was
right,
personal. If you don't do that, mostly we just have to assume that they were personal expenses if you can't substantiate them
right.
for a business purpose. So we wind up closing out your cash on hand into your equity because if we don't have substantiation, we can't prove it's related to your business.
Right. I guess I'm wondering if it's okay if you're the sole member to make that decision.
If you're a sole member operating as a single member LLC that hasn't made any
Mhm.
elections and you're being taxed as sole proprietorship, you're entitled to 100% of any of the cash that comes in because you're paying tax on all of it. That's
Mhm. Yeah,
all.
it's recorded. It came in through the point of
Yeah.
sale and
But I
yep.
mean, it's not, you're paying self-employment tax on all 100% of your profits as a sole prop, as a single member
Mhm.
LLC. So in that case, absolutely. If you need to run into the drawer to give your kid $100 for lunch money for the week or whatever. I don't have children. I don't know how much the cafeteria costs.
It's not that
Okay.
expensive. Thankfully,
But
not yet.
field trip money, whatever. If you need to just dip into the cash drawer, that's absolutely fine because at the end of the day, you're paying the self-employment tax. It's basically your wage. It gets a little trickier when you are a corporation, when you have elected into S corp status or are a partnership or a whatever C corporation, because then those assets truly are not yours. So they belong to the business, not you. So you need to document when you take that out. Again, if you're the sole member of an S corp, an LLC that elected S corp status, you can kind of make that decision, but it absolutely needs to be recorded because at that point you have basis considerations to account for as far as how much money you can take out of the business without it being taxable.
Got you. Well, that's interesting. So our first business, Josh did all the bookkeeping and did it entirely in a
Mm-hmm.
spreadsheet. And each year he would just copy, the spreadsheet into a new tab and delete all the entries and start fresh. And so we have, one spreadsheet and it's got 18 tabs at this point. Yeah. So and it worked for him. It wasn't until we opened the winery that we decided to move to QuickBooks.
Mm-hmm.
I'm going to confess that I find it very complicated. Like some people, I hear them say it, they're like, "Oh, I love it. It makes everything so simple and it's expensive in my
Mhm.
opinion." I believe our subscription is $90 a month. Like that is a lot. That is my most expensive subscription pretty much.
Mhm.
One of them. And if it weren't for the headache that it would present, I don't know if I have the fortitude to move to another system. But I meant to ask you about somebody recommended something called Wave.
That's not
That even when you're paying for it, it's only $30 or
okay. It's not a
something.
software like a platform that I'm familiar with. I would need to look into it a little bit more. But as long as it meets the functions that you need, you know, at a minimum, you're able to track your cash receipts and cash disbursements. It sounds like a fine option. Pretty much any system will be fine as long as you're diligent with it. I have clients who use a 4-column pad. I have clients who bring me a dome book every year, clients who bring me a shoebox. Ideally, don't do that. But whether or not you're using QuickBooks or another platform, you really just want to be able to track the money coming in and the money going out. Those are the major things. And if you want to be able to look back on that and use it in any sort of useful way, you need to be entering things more than once a year. You can't just pop it all in at tax time and then expect to have meaningful data to use for projections or any kind of planning.
Right. And again, like I'll confess, that is, something that we have grown into, realizing that, if we're going to be able to track, like to have accurate statements, we need to be reconciling monthly.
Yes. Reconciling your bank accounts is huge. Whether you do that in a software or the back of your bank statement or in your check register like my mom does, you need to be doing it every month. Not only does it help make sure that you have a complete and accurate picture of money in, money out for the month, it also helps you identify stale checks that you wrote 3 months ago that haven't cleared, and you have to follow up with your vendor and see if they ever got it and make sure it's reissued and stuff like that. And it also helps identify bank errors and fraud, which, there's a time clock on those things in order to get them corrected. If you don't report them within so many days of being notified by your statement, you may lose the ability to recoup any of that.
Yeah, that's good advice. And yeah, it's always a work in progress. Like I comfort myself by just trying to get a little better at everything every year.
That's all you can do, identify
Mhm.
the things that didn't work out so well for you last year and see how you can improve them this year.
Yeah. And just out of curiosity, if there was, because one of the reasons we use QuickBooks is they have this like accountant portal, right? If there was another software that had a portal,
Mhm.
a way for you to log in, I mean, it's the equivalent of being handed a shoebox, just it's a digital shoebox. Somebody else, another system. It's much more organized than a shoebox, I promise.
Mhm.
But you, you guys you would tackle using another
Oh,
system, or do you only
absolutely.
work with
No, no,
QuickBooks?
no, no. We will use whatever it is that you're using. As long as we can access your records, that's fine. Some people don't even give us access to their entire bookkeeping program. They print static reports and hand them to me, and we use those numbers as long as they're confident in them. So it just really depends on how confident you are in those numbers, or if you want us to do some classifying and entry. Um, Again, it's
Which is the bookkeeping services like that you offer that we take advantage of.
yes.
Like, so to be clear, like those are only available through QuickBooks, or would you take on
Any
another
program, anything
platform?
anything that's being used, as long as it has the option for us to be able to log into it, we will have no problem doing that.
Okay, good to know. Maybe I'll dish that $90 subscription someday.
We do
And
also offer QuickBooks Desktop, where you can bring us the envelope full of receipts every month, and we will post them into our own QuickBooks Desktop software for tracking purposes and present you with a quarterly or monthly profit and loss. But ideally, we don't wind up with the receipts.
yeah, I can imagine that that's not the best use of your time.
No, but it is important, so we will do it.
Yeah. Yeah, and honestly, like I'll keep harping on QuickBooks. Like one of the things that I liked about it was that you could photograph your receipts and
Mhm.
it would transcribe those. Google does that for free now.
Oh,
Like,
wow.
yeah, like Google Drive. And so like for the photo business, I'm like I have the same functionality
That's great.
now to like photograph our receipts and save them to a Drive folder, and it's free.
That's great. Honestly,
Yeah.
record keeping is one of the most important parts of having a business. I know that, you start a business because you love what you do. You're not there to focus on receipts, but it is so important. And if it's something that you just absolutely cannot get a handle on, I will always recommend a bookkeeper, whether or not that's through a firm or you just have a bookkeeper. There are plenty of independent bookkeepers who will come in once a month, once a week, whatever, and post your expenses, write your checks if you need that, reconcile your bank accounts, and that way it's done, it's complete. If you need information, it's available to you. And I mean, you're just paying a professional to do it instead of giving yourself a headache.
Right. Yeah. And I recommend handing off those pain points that you don't love, that you're struggling with.
Absolutely.
I think that's a solid move. Yeah, along those lines, like, so what would you recommend? Like, besides hiring a bookkeeper, let's say somebody wants to do it themselves and they're just starting out and they're not making money yet. So they just need a simple system to get going. Like I personally like with my coaching business, I'm going to give that Wave app a try and I'll let you know how it goes. I'll report back. It's free
Okay. Yeah, let me
until you
know if
need
you
more
like that.
functions.
Let me know if you like it so
Mhm.
I can start recommending it to people. I've heard a lot of people complaining about QuickBooks, the pricing model, and how they're not going to continue to support desktop and forcing people into the monthly QuickBooks Online subscription. So definitely hear that. If there's an alternative that is more cost effective, please let me know. However, if you're just starting out, if you're small, you're not making any money, you can probably get away with a notebook. If
Yeah, even not even a
no,
spreadsheet. You could
yeah,
just write it
pretty
down.
much. You know what I mean? Like just keep track of your cash receipts and your cash expenses. So, that
To me, it's obvious that you should track the expenses that you're incurring directly to operate, your overhead, accountants fees, cost of goods sold, your raw materials. But, a lot of people are starting businesses at home, and it's unclear to me like what expenses you might want to track that are deductible as a self-employed individual. So what are those expenses?
Sure. One of the major things now is your cell phone plan. You may have a personal phone. You may add a line to an existing phone plan that you're using exclusively for business. But if you are using a phone that's paid personally for your business, you can take a prorated deduction for those things based on the estimated amount of usage that you're using it for your business. In a corporation, you can reimburse yourself through an accountable plan where you provide the documentation of your phone bill and the calculation of, hey, this is how much I use the phone for business. And you can reimburse yourself for a portion of that bill. As a sole prop, you can just out of the drawer. But home office is another thing that's really big. And the first step to that is to documenting how much space in your home you're using, because that's the basis for what amounts of deductions are allowable. So if you have a 10 by 10 room that you're using as your home office and you're there doing billing and answering phone calls and those things, that's 100 square feet out of the total square footage of your home. And then you can use that percentage and apply that to your utilities, to your home internet, mortgage interest, real estate taxes, homeowners insurance, or renters insurance in the case where you're in a rental property. Also, depending on if you're a corporation and you have personal property that you are using for the business, you should be renting it to your corporation. Calculate a fair rent. An accountant can help you with that, or a letting agent can help you with that based on, oh, I've got a pole building that I put up that is exclusively for the business, and, you should be collecting rent on that. It's also another way to shift income that in some cases could be subject to self-employment if it's like in a partnership. um, you can shift that then to passive income, not subject to self-employment tax because it's rent.
Yeah, that's what we were discussing
Mm-hmm.
earlier, the benefits of passive income.
Yes. Um,
And what about like your
mhm.
vehicle and your health insurance?
So health insurance, if you have any self-employment income, whether that's W-2 from an S Corp or actual self-employment income from a partnership or sole prop, you qualify for the self-employed health insurance deduction. So that is an above the line deduction. It serves you better than the medical expense deduction on itemized deductions because it subtracts directly from your gross income to arrive at AGI. So your premiums are deductible.
But not your co-pays, right?
Not your co-pays, no. Only the premiums, but it is the premiums for your entire family. And it is also dental vision. If you have long-term care insurance, that can also be deductible against self-employment income. So there's a lot of availability there. If you do take any of the advanced premium tax credit prepayment, that amount subtracts from your deductible amount because technically you didn't pay it. If you are required at the end of the year to pay some of that as premium assistance back, that is includable in
your okay. Then it gets added back into the deductible.
Yes, because you're
or as a deduction.
Because you're
got you. Okay.
On your personal vehicle, the best thing to do is just track your mileage. You can take the mileage deduction for listed property, which is that is property used in business but not owned by the business. So you take mileage for that. Otherwise, if you have created any type of entity, you really should be having your vehicles and other equipment titled to the business. Again, asset protection, important, insurance purposes, important, but also, you can deduct the actual costs for maintaining and operating the equipment and the vehicle rather than having to use a mileage estimate.
Yeah. Yeah, that's all good stuff. Thank you. Is there anything else that like you ought to be tracking, like expense wise? It's like if you're, a self-employed individual.
Not particularly. I would say that you should make use of self-employed retirement plans where you can, if you're in a partnership and you have self-employment income, you should be considering contributing into a SEP or a solo 401k, some kind of plan. That is also an above the line deduction used to calculate your AGI. So you're investing in yourself and saving yourself some taxes.
Yeah, and the limits on a SEP, the contribution limits are way higher than on the individual IRAs.
Yes, especially an IRA. They're comparable to like as an employee contributing to a 401k, where 20% of your business income can be contributed into a SEP.
Yeah, that's great. All right, let me check my notes and we should wrap up. I don't mean to take up so much of your time.
Okay.
It's just I'm okay, good, because I'm enjoying myself. I am this kind of nerd.
Hey, this has been great. I was nervous, but this has been really easy. You're good at this.
Oh, thank you. Yeah, I love, I don't know, I just love having interesting conversations.
Yeah.
It's something that I've always gotten into. I used to do like panel discussions in college where I would bring in people of like opposing viewpoints and have a moderator. And yeah, this kind of stuff's my jam. I don't know. Yeah, well, in a civil fashion. Yeah, and we all leave better informed.
Yeah,
It's great.
It's so important to be able to share knowledge, like this may be my specialty, and if I can present something in a consumable, understandable way for you to take and use in your life going forward, that's the best thing I can do with it.
Yeah, thank you so much.
And now a word from our sponsors.
Live from downtown Jim Thorpe, Pennsylvania. Wine, Cider, and Song, brought to you by Wild Elder Wine and Cider Company.
Old Wild Elder came down from the mountain, said the secret of youth ain't found in no fountain. If you want to feel spry, we pass the age of 99. You gotta have a daily chug of Wild Elder, baby.
gotta drink it dry.
Elderberry wine, you gotta drink it dry. But elderberry wine, you gotta drink it dry. Elderberry wine, it'll probably cure what ails you.
Gonna say, going back to like sales tax, I had one little sort of niggly thing that I wanted to
Sure, flesh it out. Go ahead.
get to. So right now we have a lot of short-term rentals, right? Technically, if your average stay is less than 7 days, you're not operating a rental property. You are in the business of renting rooms. So that is income subject to self-employment tax, and you must collect hotel occupancy tax on those stays.
Oh.
Okay. And that includes stays that are organized by a third party broker or an app. You know, if you're Airbnb-ing and your average stay is less than 7 days, you need to be a listing broker. You need to have a license from Pennsylvania, and you need to be paying hotel occupancy tax, collecting and
Good
remitting
to know.
hotel occupancy tax.
I mean, having a short-term rental property is such a great side business for a lot of people, and I've known people who it's become their main business. You know, so that's good to know.
Yes.
I will say, like, my own personal experience with sales tax, like, I was surprised. Well, first of all, like, we started our business in Oregon, one of the two wonderful states that doesn't charge sales tax. And so when we moved back to Pennsylvania, it was a little bit of a learning curve that you have to charge sales tax on a service.
Yes.
Like, we were photographers, and it was surprising. But we learned over the years that we were only responsible for charging sales tax on weddings in Pennsylvania, I believe. And then if we were out of state, we didn't charge the sales tax.
And that can depend. Technically, if you're doing a certain volume of business or have a physical location,
you have to set up
in
an
another
account
state,
there.
you need to open a sales tax license. That has affected online resellers to a very large extent, to the point where Supreme Court issued a decision that those third-party platforms, Amazon, Etsy, are able to collect the sales tax on your behalf and remit it to the appropriate states. But if you are using your own website to direct sales and you are meeting what we refer to as nexus requirements in those states, whether that's a dollar value of sales or, like I said, a physical location, each state sets their requirements on their own. So it does vary. You need to look it up. But you can be required to have a sales tax license in multiple states, even if you're only operating in Pennsylvania.
What's like the average like threshold there?
Some states are $250,000 in sales. Others are $500,000 in sales. Some of them base it on a percentage of assets located in the state. So if you have a warehouse in Ohio, and that's more than 50% of your total real estate holdings, you may be subject to Ohio sales tax. I don't know if that's exactly the limit, but
I just love that you picked Ohio, because like it's a preoccupation of my 11 and 13-year-olds
I'm sure
consciousness that
somebody
they love
told me
Ohio.
right?
Yeah.
I have no idea what it means, but I'm chronically online, so
Yeah. Ohio. It's a joke. No, sorry to anybody in Ohio. You're not a joke.
no.
We love you. Yeah. But okay. All right. Well, that's good to know. Yeah. I mean, I myself plan to sell educational materials. They're intangible, they're downloadable materials, like anywhere in the country. And am I obligated to collect sales tax?
If you're providing,
I don't think so.
I think I would have to go back to the guide and check the specifics. If you're providing a physical workbook, absolutely. If you were meeting the nexus levels for these sales in these states.
If I got up to like hundreds of thousands of dollars, though, it sounds like.
Yes, absolutely. Some of those states may have lower $25,000 thresholds. Some states may say any sale in our state. but you really do have to check the guide or use contract with a service like Avalara is one of them that will review all the state sales tax requirements, how they apply to your business, and help you manage all those licenses.
Yeah. Ugh, it can be onerous.
Yes.
So I guess just going back to like, somebody who's just starting out, I don't think it's a concern necessarily.
No, it's not. But it's just something to be aware of as you grow your business, because sometimes things can just take off seemingly unexpectedly, and then all of a sudden you're swamped processing all these orders, and you may blow past that threshold and not realize it. So it's something to keep
Okay.
in mind.
Speaking about tax things sneaking up on you, I wanted to bring up what happened to us. When we started our photo business, the first couple of years, we had a lot of deductions. Like I was in school, but once we started turning a profit, it came as a rude shock to us to have to start paying estimates.
Mm-hmm.
And I believe the first year we had to be put on a payment plan
Okay.
in order to start being in a position to pay those estimates, because your taxes are due from the year before, like you were used to paying them. And actually, like I said, like we were getting a lot of deductions. I was a student.
Mm-hmm.
So we weren't paying taxes. We were in refund
Yeah.
land. Yeah, so that was a shock. Like, I mean, what advice do you have for new business owners to prepare themselves to be ready to pay taxes in advance? Because most of us who have never, who have paid as they went, are not aware of that system.
Yeah, so estimated payments are required whenever you have income that is not subject to federal withholding. So, or state withholding. So that could be from investments, that could be from rental activity, that could be from business. Regardless, if you have income that you're not having taxes withheld on, you should be making estimated payments. They're calculated on a quarterly basis based on when you receive the income. So even if you make payments that satisfy the requirements for safe harbor, you can still wind up with a penalty for not paying in the correct quarter. So it's important to be analyzing these things, to be working with an accountant or financial advisor who can tell you what you need to pay as far as estimates and when you need to pay them.
So I'm gonna throw out a couple examples
Okay.
just to, like, for lay people like myself. And so let's say, you start making $1,000 a month. Woohoo! You got your little side hustle off the ground. And that would be $12,000 for the year.
Mm-hmm.
All right. And, that's all subject to income tax.
Mm-hmm.
And it might be shocking if you wait until the next year when you file your taxes and you come to your accountant and you started this new business and you have $12,000 of extra income that needs to be taxed yet. So,
Mm-hmm.
what's something that, I should be doing? Like, how should I estimate like my tax bracket and set aside that? And what's your advice for somebody that's new to the concept that they have to pay their taxes in advance and they have to do this on a quarterly basis, right?
Yes, quarterly. In the first year that you are having profit from an unwithheld source, if your tax liability that is not subject to withholding is going to be over $1,000, you need to make estimate payments. The easiest way to calculate that is to have an accountant do it. If you don't want to do that, you can estimate your tax bracket. Self-employment tax is 15%, and that's included in the estimate calculation as well. You can't owe that at the end of the year. You'll be subject to penalty. There is a safe harbor where, first, if your tax payment is under $1,000 that would have needed to be made in estimated payments, you will not be charged an underpayment penalty.
Is that 1,000 per quarter?
No, annual.
Okay. All right.
If you have withholding on other income that is equal to 90% of the current year's tax liability, you're not going to be charged an underpayment penalty for not making estimates. And if you have paid in at least 90% of your prior year tax liability, you would not be penalized for not making estimated payments. For higher earners, however, that is 110% of your prior year tax liability. So that's if you make over 150,000.
Okay. Well, this is good to know. And maybe this is like something that I could work out like a worksheet on and show you.
There is a
And
worksheet. Yes, the IRS has one
oh, okay.
that you can use to calculate your
Oh,
estimates.
good.
It's what we use to do it. So if that's something you're comfortable with using the form, it's the 1040 ES form as
Hmm.
a worksheet, and then vouchers that you can then fill out and remit if you want to write a check.
Yeah, I would just think like a worksheet would be good to just sort of check in and see like where you're at that first year that you start earning. So it's good to keep on the radar.
Yes, absolutely.
I worked for a community foundation when the standard deduction went into play, and there was a lot of talk in the nonprofit community about how it was going to disincentivize giving. And something that, you know, you've taught me that I want to teach other people, but I don't feel like, well, I don't want to give tax advice. Um, is that as a business, you can still deduct a charitable contribution if it's an advertising expense, like if you're getting legitimate publicity in exchange for your donation.
Yes, absolutely. So if you are contributing to the boosters and they're going to run an ad for you in their program, if you get to hang a banner in the ball field or have your name on jerseys or hats or something, those things are advertising for you. So you can deduct them as a regular expense. Businesses can make charitable donations. Pass through entities like partnerships and S corporations can't deduct them from profit, but they pass the benefit of that deduction through to their owner on the form K1 where they pass the income through. So if you're an owner who can otherwise itemize, your business making charitable contributions is useful for you on your 1040. If it's not, it's not. C corporations can deduct charitable donations. There are limits to it. I believe it's up to 20% of taxable income can be deducted in any given year, and that would carry forward for a C corp.
Oh, okay. So the C Corp is a formation that can just outright make a donation. It doesn't need to be for advertising purposes. Is that what you're saying?
Yes, yeah. If they want to, they can take a deduction for the charity because the C corp pays tax at the entity level. All these other entity formations that we've talked about aren't paying any tax at the entity level. They're passing on their profit to their owner, and the owner is paying the tax. So
Got you.
there's you have to follow the deductibility rules for charity as it would affect the owner, since that's ultimately the taxpayer.
Good to know. Okay. Thank
Of
you.
course.
We've been talking right along about the benefits of working with professional advisors. Is there anything else that you want to add that we haven't touched on?
I want to reinforce how important it is because you don't know what you don't know, and it's the professional's jobs to know. So we can present you with opportunities you weren't aware of, R&D tax credits, work employing tax credits. So, there's tax credits if you employ people with a criminal history, things like that we can handle for you. The employee retention credits is something that, your accountant can help you determine if you're eligible for, if you could file for them. So there's just so much that your accountant can do for you proactively that is of such a benefit. Otherwise, if you're only coming in once a year and just getting your taxes done, there's not much that they can do for you. You have to be proactive.
Yeah, and what would you recommend? Like how many touches a year should you have with your accountant?
If you're not asking your accountant to do things like monthly sales tax or monthly bookkeeping, that's fine. But I would say at least quarterly. You can evaluate your estimates that way. You can make sure that any quarterly filings that you need to do are done. And we can tell you, okay, well, here's where you're on track for profit. So consider buying some equipment in the fourth quarter. Consider employee bonuses. In order, we can help you come up with ways to minimize your tax liability if we have enough time to do planning.
Yeah, absolutely. And that's been really helpful for us. So thank you. Because we'd rather give the money to our employees, or we'd rather invest the money in growing our business
Yeah,
and save. Reducing your tax liability is like getting a discount
it is on whatever you're buying.
investment.
Mhm.
Yep, on whatever you're buying, on whoever you're investing in, or whatever.
Absolutely.
So yeah, I love it. So independent contractors have been an issue. And well, I just I didn't know when to 1099 or how to 1099 people.
Mhm.
We have offended people by 1099ing them because they didn't expect it coming. And I don't know. Give me like best practices for a small business owner. Who do you need to 1099? How and when?
Okay. So, first of all, you need to be evaluating whether your worker is an employee or a contractor. If you are telling them what to do, when to do it, where to go, you're providing the tools, the equipment, those in order to do the job, they're an employee, not a contractor, and you have to put them on payroll. If they truly are a contractor, they run their own business, they're here, they come in to do a specific job for you that they can either decline or accept, they bring their own tools, they carry their own liability insurance, then you can 1099 them if you are paying them over $600 in a year. Best practice is when you first engage with a contractor and they're going to come do work for you, you have them fill out a W-9, which provides their tax identification number and their type of entity, because you need to issue a 1099 for any unincorporated vendor that is performing a service for you and paid over $600. So that's
So we ended up 1099ing some vendors who were incorporated. Like what one that surprised me that I've since researched and read about was our landlord.
okay.
And so business rents fall under the category of, even though we actually like write the check out to an LLC, but because he's renting to a business, we're supposed to 1099 him.
Yes, you're supposed to 1099 him. And also, just because someone's an LLC doesn't mean that they're a corporation. They could be a single member LLC, which is disregarded for tax purposes, and they would still need to be 1099. So that also holds for, your contractors, your repairmen, things like that. If they're an LLC and they haven't elected into S Corp status, then yeah, they would still need a 1099. So yeah, business rents need to be 1099. Gross proceeds paid to an attorney and any attorney's fees need to be 1099. Other income, like if you are a manufacturer who has given a promotional bonus to salesmen who are not in your employ but are employed by somebody else, that's other income and should be 1099. It's just really important to keep track of those things. Have people fill out a W-9 proactively, even if it just says, yeah, no, I'm a corporation, you don't have to give this to me. You have that piece of paper to fall back on and prove that you didn't need to issue. That's definitely.
So let me ask you this, like, you know, if somebody, sends us an invoice and they have it looks like they have a legitimate business, for providing a service that remotely at their own office with their own equipment, or not even on our property. Like that was what we ended up doing, was we 1099'd everybody that helped with a building project
Mhm.
that we did. And a lot of those people, I don't know if we needed to 1099 them, but we just did it. And but like if somebody is doing a job, and they have their own company,
Mhm.
and it's like just like paying a bill, it just confuses me that we're supposed to 1099 them,
Well,
or not.
yeah, it's basically because they're providing a service. If you're purchasing merchandise or some other good from them, you wouldn't be 1099ing them for that amount. But since they're just doing a service, there's no like tangible sort of proof that this was done, that this was paid to them for work. The IRS requires you to 1099 them. Again, as long as they are not incorporated, a C corporation. Sole proprietorships,
Oh,
single member LLCs, they need to be 1099
if they're paid over
if they're paid over
$600.
$600 in the tax year.
Hmm. Yeah, I mean, it's funny. My husband always gives me pushback on it. Like, would we 1099 the Pixie set,
Well, no, because they're a
who was
corporation.
our gallery? Yeah, okay, right.
Yeah,
But if it's
corporation, and they're providing you with something tangible where you have hosting space with them.
Mhm.
So that's demonstrable. Probably wouldn't need to be 1099. But if you have somebody coming and installing new floors, you should 1099 the installer for the labor.
Like he has a record project that he did, and the guy, like, there's a mixing engineer who has a business in New York,
Mhm.
and does he need to 1099 him?
I think to be on the safe side, yes.
And the risk is that if you were audited, the IRS would disallow
They can.
those
If you're audited and you have
deductions.
no substantiation, there's no demonstrable proof that this was a business expense, and you didn't issue a 1099, not only are you going to be penalized for not issuing the 1099, which is its own penalty, but they can disallow the deduction because they can consider it unsubstantiated.
Well, the substantiation we could provide would be an invoice and a PayPal record of the transaction. That's not
I
enough.
mean, if you feel comfortable that that substantiation would meet the IRS thresholds, I mean, and you want to roll the dice and not 1099 them for the sake of your relationship, that's your prerogative as a taxpayer. It's just that you do sort of open the door for penalties if you're found to have missed the 1099 for someone that should have received one.
I guess it depends on I guess risk assessment.
Yeah. And that's a personal decision. You know, as an accountant, I am always going to recommend following the law to the letter, because that's my
Your job.
prerogative. Yeah, that's my job. I'm supposed to be keeping you compliant. It's always going to be my recommendation. But if you decide that you're not going to 1099 someone, I would recommend that you keep as much documentation as possible to support the validity of a business deduction, just in case it gets picked up.
Well, this has been really fun and educational, and I don't think, taxes are all that fun.
I know this is the most engaging conversation about my work that I've ever had.
Oh, awesome. Wow, that's something. I'll take it.
Usually I get glazed
And
over eyes, so this is nice.
oh, no, nice. Yeah. I see these all as like tools, in the toolbox for running the business. And I think it's been great talking with you. And who knows, maybe we'll talk again. Maybe the questions will just mount and we'll revisit
Yeah,
and the
I'd be
check-in.
happy
And
to come back and address anything you feel like we missed or we didn't get to talk about. Thank you so much for the opportunity.
yeah, it's been great talking with you.
Absolutely.
Thank you so much, Jaclyn, and have a great rest of your day.
Okay, you too. Bye.
Bye. Launch Local is an original podcast produced and recorded by Amber Artemis at Leisure Lane Studio in Jim Thorpe, PA. Show music is by Joshua Finsel. This is a video podcast available for viewing on YouTube or at the show website, launchlocal.biz, where you can subscribe to the show newsletter and find helpful tools like the Ready to Launch quiz. Take the quiz at launchlocal.biz to see if you're ready to launch your own local business.